It's preparing it, and we are live on YouTube. As we like to say, good morning or good afternoon, good evening, YouTube. And we're here. So I think we're getting a good crowd, people coming in. So shall I just kick it off? So, yeah. So welcome everybody to this special interest group, the Capital Markets Hyperledger Capital Markets Special Interest Group meeting at an Asia Pacific friendly time. We have a great meeting today. We have Raj Kanan from the CTO of BondbloX. He's going to talk about what they're doing at BondbloX, the first ever blockchain based bond exchange, which is now, I think, 2 years since it came out of the Singapore regulatory sandbox. So a lot's happened. So really excited to have that. So that's really special. Thank you, Raj. And we're also going to hand in a second over to our chair, to Vipin, who's going to talk a little bit about something that came out from the White House today about some executive order, which is all pretty exciting as well, around assets, digital assets. So we're looking forward to that. But before I hand over, I'll hand first to Vipin. I have a few housekeeping items first. We do have an antitrust policy at Linux Foundation. This is a Linux Foundation meeting, so please do go and see that if you have any questions about it. We also do have a code of conduct. It's pretty straightforward. Be civil. Treat others as you would treat yourself, right? And also, I believe very much in diversity. Diversity is a strength of our community. The more diverse we are, the better our community. So please respect others. I'm now going to hand over to you, Vipin, in your beautiful Wisteria. I'm learning that Wisteria in Central Park.
Thank you. Yes, it's nightfall around here. But anyway, I just wanted to take a couple of minutes to talk about the executive order from President Biden. It is the first time that they have even acknowledged the existence of digital assets. It's quite comprehensive, the order. It goes over several items. One is, of course, the policy landscape, which is, obviously the $3 trillion value. $3 trillion value. Then, of course, it frames it as protecting the American consumer, and it has a very definite timeline for all the various agencies to produce reports and to track the reports. And if you read the executive order, it goes into great detail on about 20 or so agencies. So that's very interesting. There is also a pretty big section on CBDCs, which is, going to be important. And obviously, it is a geopolitical and strategic imperative to be on the forefront of this, because obviously, as we have seen in the past few days, it is financial sanctions that seem to have made a difference, at least slightly, but this is going to be the warfare of the future, the hybrid warfare, as they say. Anyway, I'm not going to dwell on all this because we're going to have a more comprehensive presentation on this. And Raj will now take over and talk about bond e-value, which is, of course, part of the digital assets that the executive order talks about. It covers the whole ground: cryptocurrencies, stable coins, any kind of digital representation of value like fractionalized bonds. So Raj is going to take over and
Right,
give us his.
thanks, Vipin. I'll thanks and welcome everyone. Thanks for joining in at various times of the day across the globe. Um, so today I'd like to talk a little bit about how we set up the world's first fractional exchange for bonds. And then I'll try to give you a little bit of a peek of how things work behind the scenes as well. Just going to share my screen. This helps to have some visuals. And how do I get this to move? Okay, sorry, just give me a second. The zoom bar at the bottom needs to get out of the way. Okay. All right. Okay, so another quick one to move it further up. Oops, it's not allowing me to. Okay, so a quick introduction on Bondi Value. We are a Singapore-based fintech that focuses on fixed income, and we operate the world's first fractional bond exchange, which is also called as BondbloX or BBX as our symbol. We are regulated by the Monetary Authority of Singapore. We'll talk a little bit more about what we do and who our regulator is, how this has come about. But our vision is a world where every investor can trade bonds on the go without any restrictions on minimum investments. And this is implemented via a fully regulated bond exchange. It's based on blockchain. And we also have a cloud-based bond information service that provides more transparency to the bond markets. So looking at some of the key pain points of the bond markets, right? So these are, if you look at what's happened in the capital markets, equities, I think in the late 90s, early 2000s, they modernized. They became fully electronic in every way. FX, I think that happened more, let's say a few years later in the 2010s. And we feel that the time is appropriate for the bond markets to join that revolution, if you will. Bond markets, by the way, are larger than even equity markets, just because of the sheer size of the issuers and the number of bonds issued and the size of the issuances as well. But the pain points are still decades old, right? So for those of you who may have bought or sold bonds, especially in Asia, large parts of the trading is still phone call driven. Minimum sizes, again, especially Asia, maybe Australia, the Europe as well. The minimum ticket sizes are in the region of US dollar 200K. And then they're non-exchange traded. They're largely traded on marketplaces that are over the counter or OTC traded. And all of this, I think, contributes them to be largely illiquid as well. So the complexity of bonds,
especially Asia, maybe.
Go ahead. Okay. There seems like there was an echo. I thought it was somebody else. It's me. The complexity of bonds requires deep domain knowledge and tech knowledge to come together to create this kind of a market infrastructure that can solve all these problems. And we'll take a little bit of a look at how we are doing it. Right? So this is an overview of the BondbloX exchange system. As an exchange, we work like other exchanges with banks, asset managers, brokers, fintechs, etc. And then they provide access, like a bank or a broker might provide access to the exchange through their connection with us. We are licensed by the MAS. We were the first to get into the MAS Sandbox Express. And then we were able to exit to get a full recognized market operator license on the 1st of October 2020. We have integrated with global custodians, I think global, so it's many global custodians or a couple of global custodians, both Citi and Northern Trust, two of the largest custodians, the biggest and most respected names as well in the custody side of things. are fully integrated with us. And we'll talk about how this sets up the ecosystem for us as well. We have, as we stand, we've grown our membership since the late 2020, despite all of the COVID headwinds that hit. So we have, as you can see, these are members. UOB Kay Hian is the largest broker in Southeast Asia, part of the three big names in Singapore as well. We have others who are based out of Century Private Wealth is in the Middle East, Investment Services UK is in UK, GFM I believe is in Hong Kong, and then Alresita in Indonesia. So it's there's many questions on what bond exchanges can do. Bond exchanges by their nature, and because we're based in Singapore as well, are global. So our clientele, our members are global, and we continue to bring on more members, onboard more members as we speak. So what is BondbloX, right? And how did we construct all of this, the digital asset that's BondbloX, right? So we haven't really taken away what is a market practice. Rather, we are built on top of a existing market practice, which is the practice of creating depository receipts. For many of us, we would have seen in India especially, right? A lot of the big marquee companies started listing in NASDAQ or the New York Stock Exchange. And that process was through the global depository receipts, or the American ADRs, American depository receipts. So BondbloX is basically a depository receipt of an underlying bond. It carries the characteristics of the underlying bond, except in one area, which is that the minimum denomination is $1,000 versus $200,000 for most of the bonds that we have on the exchange. So what is the process of creating the depository receipts? So depository receipts, interestingly, are a method that can be used for fractionalization, but they've, in the past, they've used almost in the reverse direction, right? So you take, let's say, if there's a share trading in India at 100 rupees, right? If it goes to the US market in its original denomination, it becomes $2. It's coming down to looking like a penny stock, right? So what they used to do was to take 5 shares and then put it as one depository receipt, right? We are doing what's the opposite of that. So for a secondary bond, for an existing bond in the current secondary market, in its original denomination, the bond is brought in to the exchange by one of the designated market makers, and it's custodized and safeguarded with one of our designated custodians, Northern Trust of City. When the bond is received by our custodian, they confirm receipt, and this confirmation then creates this underlying digital asset, the BondbloX, in the distributed ledger. So we use Hyperledger Sawtooth, and it creates the BondbloX equal value, but now the denomination is just $1,000, right? And we also have a dual fungible process, which means the market maker, if they have bonds in the original denomination and increments, if they want to go back and take it back to the secondary market, they can funge it out by withdrawing it from the custodian, and a similar process happens in the reverse. So some of the key benefits before we get into a little more of the underlying the flows, it's vis-a-vis being phone driven, it is fully electronic now. You can place orders, and if you have your own application, you can connect via APIs, or you can deploy. We have in order to seed the market, we created a deployable application that we host for a majority of our members to get go to market really fast. Because we have the bond in the ledger, we also have the cash in the ledger. So if somebody wants to buy a bond, they would transfer cash to one of our custodians, the same process, and it would get recorded in the ledger, and it's lockbox with the custodian. So the orders itself match like any exchange on a central limit order book on a price time priority. But at the end of that order matching process, the settlement instructions are sent to the DLT, and the settlement is instantaneous. In a way, if you look at the infrastructure, we are kind of fully integrated. So typically in the market infrastructure, you have an exchange, you have a clearinghouse, you have a depository, a bank, those that custodize the underlying asset or record keep for the underlying asset. And there's a flow that in the bond market typically takes T+2 at the end of the trade. In our case, the trades are instant, reduces risk, etc. But also you are able to then utilize whatever you've got at that point in time. Small ticket sizes, we work directly with partners. We have a small set of bonds, which we are growing every month. The idea is that in the bond market, there are millions of bonds issued, but we want to take a small set of curated bonds that provide liquidity in our market. Dual fungible, we are not a crypto, we are not a crypto exchange. The underlying asset is not a crypto, just as a disclaimer, but and we are regulated by the Monetary Authority of Singapore. And then we use a third-party custodian for asset safeguarding. So how does this whole process work, right? So in order for the exchange to function, we need to have bonds in the exchange. So a market maker, a designated market maker on the exchange, but it could also be any participant in the exchange, can bring in a bond. So I'm taking the example of a bond that is quite popular in our ecosystem, which is the HSBC 6.375 coupon perp. So they bring in $200 of that bond and they transfer it to our custodian, right? The custodian custodizes that and confirms receipt to the blockchain. So at this point, I'll also talk through, we use Hyperledger Sawtooth, and we use the PBFT consensus because PBFT is non-forking, it's Byzantine fault tolerant. So when we say it's instantaneous, right, you don't have to wait for fork resolutions and such to confirm. It's committed as soon as the action is taken. Okay. So when the confirmation happens, the transaction is distributed to all the nodes and then the PBFT consensus step kicks in, right? So PBFT has a sort of a rotational leader policy, and the leader at that time would order the transactions into blocks and distribute that to all nodes. Transactions are executed by every single node. Vis-a-vis distributed databases where the leader does everything and then only the data updates go. This is part of how, I guess, the underlying blockchain system is Byzantine fault tolerant. And all nodes compare the execution results with each other. And if greater than 2/3 of the network have identical results, then the block is committed, right? And the node's global state as well. So you can think of the global state as, set of accounts and what's under them, what assets are under them. So you can see that one-to-one backed BondbloX fractional units are created. So the market maker account now has 200,000 of the underlying bond. The other good thing about the Sawtooth system is that it's completely event driven. So as things happen, events are sent, so everybody gets updated. It's asynchronous, but you get updated as things happen instantaneously. So BondbloX, as we mentioned, are also fungible, and the reverse process happens if the market maker wants to take it back to the secondary market. When a member wants to buy this bond, there's a similar process where they move cash to the custodian and then they can place orders. So we'll take a quick look at the orders flow. So the market maker places orders to sell the bond. They no longer have to do they can place multiple orders at 1K. So you can have various strategies that you can follow to have like a ladder-based approach and so on. And a member then may place an order to buy. These are all firm orders, so it's not like a quote and it's not like the OTC market. So Bondi value as an exchange matches the order via central limit order book, and the confirmations are then sent for settlement to the DLT. And so when this happens, again, the underlying PBFT process kicks in, and the updates in all of the nodes and the ledger is instantaneous. And then you can see that the account under the hood, the accounts then are updated to reflect the new account balances as a execution of the settlement or the confirmation of this order. Right. And again, one of the things that I really love about this is that you don't have to kind of look for data updates. It comes to you directly from the event system that Softwood supports. So why are we using the blockchain? There's a lot of question about it. It's a permission network. It is largely between Bondi Value and the custodians who maintain the safeguard and maintain the assets. But it's a single source of record. It's the reason I mention events a lot is because it's really efficient when it comes to messaging and communication. Some of the benefits that you would have seen, the efficiency improves. There's very little reconciliation efforts. The settlement is T+0. It's instantaneous. It also enables new models of execution like fractionalization. Another look at how this system is. When we start off, we always we connect directly. We put in a blockchain system and then we look at how it works. But while the underlying abilities of the blockchain system are really robust, the interactions are not really so, right? Like all of us who have worked with this know that when you use a CLI or a terminal, you get data, but it's really not consumable by our end users. And this is the system that we have in place. We've combined the underlying blockchain system along with the fully 100% cloud-based approach, which funnels all the events that the blockchain provides back to the front end in near real time using MQTT and IoT based service from AWS. Okay, just getting into a few of the challenges and the lessons learned. Again, I did this last year as well, but I still feel this is a new technology paradigm. There's a lot of excitement about what blockchain can bring, and truly so. It makes us, opens our mind. It makes us think. There's an excellent paper on the capital market SIG. I think it was done by some of the folks at Euroclear and sponsored by them in 2016. So it was quite incredible when I saw the date. But a lot of things that we have, independently done, they really, I can see in that paper there's so much of thought process and visualization of how things would move forward, and we are somewhat at the forefront of that. So we have to, your engineers, our engineers, have to really dig in and understand how this works. Be ready to work with some of the, some of the nature of not being a fully mature technology, being at the early stages, especially as it comes into adoption into digital assets at a enterprise or corporate level. Deployment of updates requires a coordinated effort. So needless to say, if you make changes, you add new features to your system, you typically just deploy, you have the best deployment process. You can do it very quickly onto your existing non-distributed systems, distributed ledger systems with partners. In this case, it requires, like any network, it requires a coordinated effort, right? And so you have to have plans, you have to have agreements in place, and also the ability to sort of correct things are challenging. So you have to make sure that you have a higher quality when you release out, especially into production. There are complex transactions, and the blockchain may not be the best execution platform. So for example, the whole order matching, and if you look at even the crypto exchanges today, right, everything is executed as an exchange, and then the settlement is taken care of by them with whatever blockchain system, crypto system they're using. The data in our blockchain system is completely anonymized. So we don't, even though it's a private network, we do not, put personally identifiable information. It's anonymized. But that also then brings in a need to combine off-chain data with on-chain data. There's also a lot of market data that's quite rich and diverse in nature, right? And what we need to do is to be able to combine on-chain and off-chain data to provide a really rich experience to your users. Finally, needless to say, for every kind of financial system, you have to plan for DR availability, etc. But if I go back to point number one, this is new, right? Just you have to figure out how what you need to put in place to ensure also the immutable nature of the blockchain, and so on and so forth. So we have done a number of things over the years. Complete automation of tracking of, has everything gone in, automated reconciliations, backup, recovery, etc. This is my last slide. So just on what is the future of BondbloX? What are we looking for, right, going forward? So today we have about 30 bonds, and this list keeps growing. We have issued, I think, over 50 coupons on the platform. So one of the flows that I didn't discuss is that we have to take care of corporate actions, which we have been fairly efficiently doing on our end. We have had a couple of redemptions, calls, puts. So we have exercised a lot of the features of the existing markets, right? And we are live. This is completely production. We are on the hook with the regulator and so on. What we plan to do going forward is that to increase the size of the number of bonds, the bond universe on our ecosystem to 250 this year, but hopefully we'll keep growing that. We don't intend again to have the entire 1 million+ bonds issued, but take care of what our members and their clients require from their investment purposes. In addition to this, we are looking at other opportunities. The underlying DR ability, right? Anything that can be custodized by our custodians and then issued as a DR is a powerful concept where we're looking at other kinds of digital assets or other kinds of existing assets to digitalize them, like maybe funds, maybe ETFs, local currency bonds, so the DR allows them to be issued in a different currency for settlement, so on and so forth, right? That's part of the future that we look for in the near term. So with that, I'll stop. Thanks to everyone. Please feel free to contact us on any of this. I'm happy to share my email address as well. It's rajaram.kannan, first name dot last name @bondivalley.com. So I'll stop here. I'll hand it back to Vipin or Julian. And thanks everyone for listening.
Thanks, Raj. That was awesome. As normal. Thank you. An amazing activity there, right? With BondbloX and Bondi Valley. So thank you. I think now, as normally, Vipin starts with the first question. And David. So I think we've got a lot of questions definitely here, right? So people put questions in the chat or answer, or just stick up your hand and ask questions, right? And please do ask away, because we have Raj here. Vipin.
Okay. I mean, I was just waiting for David to start off the questions, but I could. I mean,
You go, and I'll go next.
Okay. So it looks like Mushir has put up his hand, so yeah, maybe he should do it.
No. Once you guys go ahead, I will kick in after that.
All right. So you said that you have the off-chain data somewhere. What is the platform that you use, and how do you integrate those off-chain data with the on-chain data in a seamless way?
Thanks, Vipin. So I think it's a couple of points. The off-chain data, the nature of the off-chain data is this, right? So let's say that you open an account with one of the members, right? So the details that this account belongs to Vipin is with the member, and then the anonymized account ID is created on the blockchain, right? So part of combining that is that combining, let's say, your information by your member, the member that you're onboarded with, and your portfolio holdings and transactions with what's there in the blockchain is an example of what is done. Right? We also derive a lot of information like market data, the bid cells, and so on, and we want to distribute that faster. In terms of the clash amongst the data is limited, so we are not duplicating too much between the off-chain and the on-chain. It's sort of enrichment of data that's on-chain with two goals. One goal is that on-chain is anonymized as much as possible, and the second goal is that you can make richer querying, richer ways of showing data when you combine them with off-chain data, and then let your users interact with that.
What platform do you use for that? I mean, I know that in terms of the KYC and the other things, it's the client's platform, but since you're also handling some of the data that you yourself are providing, then there must be some kind of a distributed database or IPFS or Storj or, I don't know exactly what you guys are using.
Got it. So what we do is we are completely cloud-based, right? We are on AWS today, and there's also a case study on AWS on us, which also explains out some of this. But we store all of the data on Postgres on our end, and then we there's a system of so if I were to explain a little bit, right? So in that flow, external, internal, when an order comes in and the settlement happens, right? The Hyperledger system shoots out an event, right? And we listen into those events, or those events are, we use like SNS and SQS to integrate back to our systems. And the data is updated instantaneously, right? Back into our system. So all the updates happen in the blockchain and they are updated back to our traditional database system. The database is a multi-AZ, highly available. We keep adopting new technology as they come up. So, as soon as AWS came up with the proxy, we put that in place. We tested out that for failovers are super fast, like, less than a second kind of thing. So, and then we don't stop there with it, right? So what we do is for connected clients, right? We are able to send the update directly to their front ends as well. We use the AWS's IoT core. So they're all connected via MQTT. And so you kind of, as markets change, as your order status updates, right? And so on and so forth, you kind of see it like nearly the same time as when it happens on our systems in the ledger and then in our backend.
There seem to be several questions on the chat also. And I can,
while you're going through those questions, Vipin, so I'll ask just one quick one, then we can go to Michelle and then go through the chats if you want. So
sure.
So Raj, again, thank you. Excellent presentation. I think that's being well commented in the chat box. Just when you opened up, obviously I'm always concerned about regulatory compliance, et cetera, and ironically, Vipin also mentioned the latest executive order coming out from the US. So at the moment in time, as you quite rightly mentioned, you are not an exchange. You're not a crypto exchange. And obviously it's early days to understand the full machinations of what's on the latest American executive order. But as you mentioned, because bonds are global and we have various regulators who are competing to understand, and securities, and we know the problem that's happened with a few exchanges with different regulators, etc. Do you think that shortly your activities will be regulated? And if it will, do you think that should be an impediment for your growth? Personally, I don't think it would, but I do think it would be good if entities were also regulated to provide also that trust element to the marketplace. But it'd be interesting to get your thoughts.
David, A, we are an exchange, but for bonds, right? And B, we are regulated today. So we are fully regulated by the monetary authority, by the MAS in Singapore, right? Which is one of the regulators of renown throughout the world, right? Like they took, by the way, our application took us a year and a half to because of what you're saying, right? The nature of the assets. It's a digital asset. It uses distributed ledger technology, and they took. They inspected every part of our solution to see that, I mean, from a regulator's perspective, and once they give you a license, right? People look up to the regulator to ensure that you are performing according to the standards that are expected by both the regulator and there's a reason for the regulators, the public in general as well. So as on date, we are fully regulated. The regulation permits us to work with members across the globe, right? And what we do from a KYC perspective, so we don't KYC the end clients because our relationship is with the members, as Vipin pointed out, but we KYC the member themselves. And part of that is to ensure that the regulations in their home country permit them to connect to us and to sell these bonds. So in Singapore, for example, you're allowed to sell bonds, even though it's now fractional, right? Only to a certain class of investors, institutional or accredited investors, right? But in other countries, the regulations change. So we work with the members, and we have a full process that involves ascertaining that they are able to follow the local regulation. Right? In cases where the member in the local market says that you need to, they need comfort in us talking to their local regulator, we are in conversations with local regulators as well, if and where needed. It's not required in a lot of cases, but in a few cases, we are talking to the local regulator to see if there's anything further we need to do. Do we need to sort of apply to the local regulators in certain cases? The other part of, David, what we are doing, which I didn't mention, we already have a joint venture in Mexico, and then we are looking at a couple of other countries where we want to take this platform and launch local currency exchanges, right? And so in all of those cases, we will have to go and get a license from the local regulator. So we're looking at what are the appropriate licenses, right? And again, to your point, Singapore has been a little bit ahead of this because they, in fact, they encouraged us to look at a model that also underlying use distributed ledger technology and such. But then they took the appropriate amount of time from their perspective to ensure before they allowed us first into the sandbox, and then the full license out of the sandbox. So to your point, we are already regulated, and I think we are regulated by one of the eminent regulators in the world. So we are acceptable across the globe in general, but where required, we are interacting with local regulators as well.
Thank you very much. I'll hand back over to Vipin or Thomas.
I think Mushir.
Yeah, it's Mushir has got his hand up, so
Thank you, guys. Look, very, very interesting again, and thank you for the presentation, Rajiv. Mike, what I wanted to ask was the question on two fronts. The one is with regards to the refungibility. May not be the right term, but you've talked about dual fungibility and the ability to funge for the BondbloX to be funged back to the original bond, right? So would like to understand that process a little bit more. Secondly, it's a side question, it's not related to this, but have you had any green bonds being issued on your platform, or have they been typically your corporate bonds that you've seen?
Sure. So first, on the first question, Mushir, The process of dual fungibility is, again, it's fairly straightforward. So if you think of it, let's say it can be a market maker, but it can also be it can be any client, right? As long as they have the requisite quantity that is acceptable in the current interbank market. So what I mean is that if the bond requires a $200,000 minimum, right? Combination, and if they have it in the BondbloX size, there's a process through which from our custodian, right, we can withdraw that bond into their custodian, and the corresponding BondbloX is knocked off from the system, right? So it's a fairly
Okay.
right. It's I guess in a way it's like saying, if you add 100 cents, then if you want $100 bill, I mean, money is almost fully fungible, right? But here, if
Sure.
you wanted $100 bill, you need, and you wanted to exchange $100 bill, you need, let's say, $101, right? So if you have that, then the process is fairly straightforward.
Okay.
Okay.
Thanks.
The second question, Mushin, again, you said it was off.
Green bonds.
Green bonds. Okay, sorry.
Yeah.
So yes, we do have plans to list green bonds on the exchange. The criteria for listing bonds is, we have a criteria for listing bonds, and as long as the part of it is, let's say some of the criteria is related to demand by members, is related to type of the bond, in the sense that it should be a bond that does not have, let's say, funky features, right? It should be somewhat straightforward in its construction, in its prospectus, and then a market maker willing to bring in the bond, right? So having met those criteria, I'm sure you'll see green bonds being listed sooner than later.
But you're not going to do anything special in terms of the provenance or anything of the green bonds. That is all outside the system.
I think there will be some, that's correct. So the system itself will not look at the provenance from the green perspective of it. But again,
yes,
there are some very interesting conversations going on.
Of course,
how we can,
because that is one of the biggest problems,
right.
the so-called greenwashing.
Right.
Yeah.
Right.
Yeah. Maybe, if I can, this is going to be a very quick one. Do you also, are people, buyers able to see the rating of the bond? Is there live, do you have APIs plugging in into any of the credit rating agencies, or is it just the basic information on the bond when somebody's looking at it that's included?
So Mushir, actually, if you go to our website, right, bondblox.com, I'll just paste it here.
Yeah.
And you click on, you can actually click on listings.
Okay.
And, you can see everything that we provide.
Okay, cool.
We provide ratings from all the 3 major rating agencies today where available, right? And we provide a bunch of other underlying information on the bonds and so on. So.
Okay, understood. Thanks a lot. Really appreciate the opportunity to ask the question and your answers. Thank you.
Thanks, Mushi. Thanks for asking the questions as well.
So there are 2 questions here on the chat. First one is, you can read it?
Okay. Yeah, I just opened it on the side. So maybe I'll go by the first. By
order, yes.
The same order. So first is by Emil. What's your plan of adopting stablecoin or CBDC for settlements? So very interesting question. I thought I'd put in a plug somewhere in between, but the question helps me do so. So currently we do our bonds and the currencies of the bonds that we currently support on the exchange in Singapore is basically US dollar and Sing dollar, right? We don't have CBDC yet in US dollar or Sing dollar. So the announcement from yesterday that Vipin brought up, right, is very exciting news. Now, the MAS had I think for the last FinTech Festival last year, they had like this competition for like a regulated liability network, RLN network, with looking at CBDC and such, right? And we were part of a team, which was a consortium of banks, a couple of technology providers, and us to show integration from our systems into their demo CBDC system, right? And I can tell you that it's a very exciting place for us. We are able to think of it as sort of many interesting things in that, right? So just from a efficiency perspective, right, we were able to show that at the time somebody wants to buy something, right, they can click and transfer CBDC in, right? So versus the fully pre-funded model, right, and super efficient. And it was a live integration, no real CBDC under the hood, but if there was, it would have been live, right? So we can go live. If that system gets live, we can be live in a couple of days after that. The second interesting thing from the underlying perspective is there's a CBDC network and there's the BondbloX network, and there's sort of the interoperability in really, sub-second, sub-millisecond, whatever time frame, right, for all of this to happen. So we were able to establish that as well. So to answer your question, we are looking forward to adopting integrations into any CBDC system. I think if there's cross-border, it becomes even better for us, so on and so forth. And we are very well prepared for that, right? And we are looking forward to something going live.
So this interoperability thing, do you have, is it available? Is data on your solution available? Architecture, anything? Because I'm only interested in it for my interoperability paper, of course, also otherwise. But we are conducting we are writing a paper on creating standards for interoperability in ITU, which is the International Telecommunication Union, which is a UN agency. DCGI, it's called Digital Currency Global Initiative. Anyway, the other question you can read yourself, the next one.
Yeah, and this is also a very interesting question. So this was from Wei Chiong. If I don't know, forgive me if I got the pronunciation wrong. May I know if there are specific features over Hyperledger Sawtooth? So the question was, why was Sawtooth selected over other blockchains such as Fabric? And do you see foresee any planned migration? So I think the first, the reason for Sawtooth, right, is that Sawtooth has a very relatively simpler architecture compared to at least what Fabric was 2 years back, right? So if you think of trying to have intercompany Kafka, right? To have within your company Kafka itself is a fair bit of work to establish, but intercompany is a lot more. And as we work, one of the things I have seen, right, with many of the current projects is that while all participants are on the blockchain, the system itself is run by one of the participants, right? The technology participant. In our case, we tried to really push so that our participating members, so Northern Trust, for example, are actually running their own nodes in their own infrastructure, right? And if you think of the ability to then connect, right, and have so many different protocols. Sawtooth was very simple, right? Your validator at port 8800 connects to port 8800 of the other validators. Like there's no central certificate authority. Then, so that's one part of it. The second part of it also is, second part of it was that we were able to. You have to focus on a particular system to kind of get it to a stage where you're comfortable that that when you move it to production, you're able to handle any kind of cases that happen, right? And the simpler the system, the more easier for you to accomplish that. So that is sort of the underlying why we use Sawtooth. There are things that Fabric has that I wished Sawtooth has, right? The ability to sort of restrict data by members, so on and so forth. And of course, in the future, we are, we keep looking at what's out there to see how it can achieve what we have achieved and give us something more on top of that, right? So we are open, but we have to also remember that we are now a live network with multiple participants running it in their infrastructure, where they've had to do certain things to make it work in their infrastructure, whether it's from networking, whether it's from platform. Some of them had to build it out, take the source code and build it out on their version of like RHEL, for example, right? So the amount of work it takes is a lot, and therefore we keep looking for opportunities, because if you do that now and if you decide to move, then it'll be a significant time later. But
and just in relation to that, Roger, and that question, is there anything in there regarding, obviously you've used underlying technology, anything about forking issues that are important that you've actually had to deal with, some of those challenges?
Sorry, can you repeat that again, David?
Forks.
Fork. So in relation to that last question, is there anything in there regarding forking issues that you've had to grapple with, and obviously looking at for going forward as well?
I think many of the other systems, right, or have non-forking options. So I think in Fabric supports in its 2.0 version, they've simplified it now. So no Kafka required. They have a BFT algorithm, right? So it is. I do believe, or they have Raft as well, which is not Byzantine fault tolerant, but it's a non-forking algorithm. So I think. We stumbled upon PBFT, right? We were originally planning to go down POET, which would have been a forking algorithm. Then we would have had to figure out something else. But then we found PBFT to be really robust. It was a great implementation of software. Really, really impressed with the guys who've done that, right? And it was robust. It was easy, pluggable consensus, and so on. But the other, David, to your point, I believe that other blockchain systems also have options today in terms of consensus, at least the enterprise ones that we can use.
What about the tooling required to deploy and things like that? Because that seems to be a big problem. For example, in Ethereum, you have this whole a testing infrastructure, truffle, all those things. But is there a comparable deployment architecture? Because I've been using Mini Fabric to deal with Fabric, and it is pretty. It's pretty good. Mini Fabric is not just for testing. It's proven itself to be good for operationalizing as well. So I think that, is there a similar thing for?
It's actually quite straightforward. Again, probably because of the simplistic nature of Sortu. It's all container based, right? So yes. It's a set of containers, and you can use any of your container deployment methodology.
Docker or something.
Right. It's all Docker. But yeah, you can also do any other container. But let's say they're all today available as Docker containers, and the equivalent transaction processor that we have built is also containerized, and it's made available to our members. We can use their deployment methods.
Yeah, I mean, Fabric is also container based, but there are so many things to organize.
Right. So that's the whole point of Sortu, is that there are not so many things outside of that. So it's kind of it's containers, a small set of scripts potentially to generate your initial validator keys, setup, and so on, and some a little bit of off-chain configurations to say who else to connect to, where do they exist. But beyond that, a lot of the configurations are on-chain. So once you're connected, then including the consensus who participate.
So how many nodes do you have in your?
So currently we are running about 6. Right?
Oh, okay.
Now, our goal is we're not looking at it as a 100 node, 5,000 node system. It will not be efficient, right? Then it'll start going into. So with PBFT, it's a very it's also a very verbose
Number of messages.
Yeah, a lot of
Yeah.
messages, right? So we we think 10, 15. I think it will all depend on and we are talking to a lot of other custodians, the global big custodians, because having more custodians makes all of this more simpler. So clients of those custodians are able to interact more easily. So largely our custodians and us, and there are 5, 6 large custodians in the world. So
and there's another question there saying, what is your daily transaction volume, and do you think Sawtooth is scalable to handle it? Obviously, you do think that Sawtooth is scalable to handle it, but
yeah, I think I won't get into so much of the daily transaction volume. We are in our early stages yet. We do maybe on a good day we'll do a few $1 million of trades, but we have to look at I mean, Sawtooth is at this point, right? It is scalable. We have done a lot of benchmarking, and if you look at bond markets today, right, the number of trades per day average, I think there was a paper sometime back, right? It's in thousands for a particular bond, versus when you take a stock market equity exchange, then it's in millions, right? So the comparative, what we need to achieve if we get, if we really conquer the entire bond market, and we are looking at a slice of it, right? Is still something that we are way ahead of now. So we are in between where the bond markets are and where the stock markets are. I think to your point, the scalability side, you're right. I think of it this way, right? So if I had 6 systems, right, I would probably get 5.9x additional benefit. Whereas because I'm using 6 systems doing the same thing, right, we actually get 0.9x, right? So because of all the the whole consensus process and all of that. So the same transactions executed everywhere. But when we take a look at what it brings, today because of all these various networks, centralized systems, etc., all of the settlements process, all of them take this T+2, T+1, T+2, etc., which we reduce that life cycle from 1 to almost 0, right, or 2 to 0. So that's where the efficiencies really come in.
It's a different problem statement that you're solving with bonds as opposed to with the equity markets, and I know that Vipin and I both worked in that sector, traditional sector. It's a different problem statement, but yeah, very much.
Right, that's correct, and I think it's also how a transaction is defined as well, right? So
yeah, definitely.
Yes, when we were defining it in the performance and scale working group, we had a lot of quarrels, especially with one of the designers of Sawtooth.
Yeah.
Anyway, I'm wondering about one more thing, which is, if things are so fast, does it take away from the resilience or the, somewhat from problems of the system? Because time helps, reconcile. I mean, obviously, if you're not making errors, then you don't need to reconcile. But anyway, I know why Julian is here, because time is up.
I think we've hit the hour and beyond, right? So
yes,
and
I'll just to Vipin's question,
please.
In a very quick way. I think I'll refer back to the paper that you put up on the Capital Market SIG. That was the Euroclear sponsored one. Just what you see there, right? Because Euroclear is a premier clearing agency, right? And they have the CSD as well. So they, it's really, that's where the efficiencies are coming from, really, right? The problem today is there are so many sources of records, right? Your bond holding is with the depository. Your cash is with some kind of bank, right? Then the clearing has to come in between because it has to get transferred, right? Held, then cleared, right? Then you reconcile because you can't give the bond to the other person until the cash has come to you. So then you give the cash, you give the bond account, for DVP process. Now, when everything is inside the same ledger and it's lockboxed outside, right? The reconciliation is really almost non-existent, because you have just
Yes.
that single force, right? So I think that's where the efficiency comes from. And of course, to your point, if there are errors and such, right, that's where we have to be really careful and keep them simple, right? The simpler we keep the transactions, the less chances you'll make mistakes. And you have a whole system around that will ensure, that.
Well, we are also thinking of introducing circuit breakers and like that.
We do, we have all of that. So we have circuit breakers, we have a erroneous correction policy with support in the system to correct erroneous trades. So we have taken the standard market, then we have tried to bring in the new benefits of the new technology and combine them. So we have done both. So we do have a erroneous correction, to your point, circuit breakers, erroneous corrections, and the ability to execute them as well.
Julian,
Sorry.
No. This is excellent. I wish I could bottle this and sell it. It's awesome. This is really good stuff. So thank you. I think we just have to come to a wrap to an end, right? But I think we need a follow-up, maybe a follow-up in more detail there, right? And thank you, Raj. Thank you, Vipin. Thank you, David. Thank you, everybody. I think that was a great meeting. And Raj, yeah, thank you. We hope to hear
thank you so much for the opportunity again, and thanks everyone for.
Thank you, Raj. Thank you, Julian. Thank you, everyone.
All right.
All right.
Take care, everybody.
Now to sleep.
Bye-bye.
Now to sleep.
and to our day, right? So, Raj, you should probably have your second cup of coffee or your first. I don't know where you're on, but
and then I'm on to my day. Thanks.